Hi, I'm Tom Lydon here in Hollywood, Florida at the Inside ETF conference here with Sal Bruno, who's Chief Investment Officer and Managing Director at IndexIQ. Great seeing you, Sal.
Great to be with you again.
Another great conference.
It has been.
But even though things are nice here, things around the world continue to be shaky from time to time. So what are advisors to do when you think about geopolitical events?
So when we sat down in late 2019 to do our outlook for 2020, we were pretty constructive on the outlook. We had phase one agreement on trade deals with China. We had agreement on trade with Canada and Mexico. We had a budgetary agreement. There were a whole bunch of positives going into the new year, but of course that quickly gets derailed by geopolitical events, whether it's the issue with Iran, we have the coronavirus coming out of China. And so we've been talking to clients about is always be prepared, have alternatives in your portfolio, whether it's a market neutral type strategy or merger arbitrage strategy. These have been shown to help make your portfolio more resilient as they have different drivers of returns that aren't always affected as much by some of these geopolitical events.
So we survey advisors all the time, and they're saying now, 11 years into this bull market, that they're a little bit more concerned than they've been in a while.
Yeah.
And with that, we also know they've been underallocated to alternatives. What can an advisor do to make that commitment to make sure they start to diversify?
So it's funny, we actually saw the same thing. We did a study with Greenwich Associates to look at institutional uses of alternatives and liquid alternatives. The conclusion that they came out with was that they expect the liquid alternative ETF universe to double over the next 12 months, from 50 billion or so to more than 100 billion. And so we think that advisors need to make that commitment. I had somebody describe it as eating your broccoli. It's good for you, but you don't necessarily like it, because when the market's up 30% in 2019, you're saying, why wasn't I more allocated to equities? But then when these geopolitical events come, you're kind of glad you took that sort of dose of broccoli.
Yeah, you get some in your teeth, but it doesn't kill you, right?
That's right.
No, but you're absolutely right. Especially today, a lot of advisors and investors are patting themselves on the back for being long growth.
Right.
Fixed income market hasn't treated you that poorly either.
Yep.
But take it for a little bit of luck as well, and everything reverts back to the mean. And with that, when we're seeing this huge diversification between growth and value from a valuation standpoint, we're going to see things come back to the mean, and alternatives are a great way to be able to settle up on that, right?
Absolutely, and again, they're just providing a differentiated return stream, not always affected as much by some of the geopolitical events or even by necessarily market movements. They just have different sets of risk, which is really what portfolio theory and portfolio construction is all about, getting a bunch of different risks uncorrelated with each other, put those together into the portfolio, and that's what Alt's meant to be.
Yeah, eat your broccoli.
I always do.
Great seeing you, Sal.
Same here,
Thanks.
Tom.